Wall Street background, Morgan Stanley, like Bruce. This little thing happened when you tried to donate some Bitcoin to your university, and boy, you've been on fire ever since, just tearing down roads and bridges and putting up new ones. And I don't want to steal much more thunder than that. Also, you were the Symbiont, was sort of your first kind of blockchain, executive experience, and you've just now kind of, you put as your title like, head of CaitlinLong.com.
Jack of all trades.
Jack of all trades.
I don't really have a title right now. I'm just working on passion projects.
Passionprojects.com. There we go. No. Okay, well, let's have a seat.
Thank you. It's great to be here. Thank you.
Thank you.
This is great fun because this time last year, we had hatched the idea of the utility token bill in Wyoming and had no clue whether it would go anywhere. We knew we had an uphill battle just to get the money transmitter act fixed. And for background, Wyoming was one of 3 states that had bad money transmitter laws that were written pre-crypto that essentially said that the money transmitters had to keep a dollar for dollar cash reserve equal to the value of the crypto that they were exchanging. So it made it uneconomic for everybody to be in business. They all pulled out in 2015, thus I couldn't contribute Bitcoin to the University of Wyoming. We figured we'd get that fixed. But by this time last year, I had actually connected with Tyler Lindholm, who is the guy with the big, huge cowboy hat. If you've seen any of the pictures, and he's been the legislative genius behind what we got done. And we got 5 bills through, the hardest of which was the utility token bill. And we were just chatting right before we came in the room. This has definitely not been a switch flipping like the marijuana legislation in Colorado, right? We didn't expect that this was going to bring in thousands of people overnight. It has definitely brought in dozens of, there have been hundreds of companies that have registered in Wyoming in lieu of Delaware, which is a big start.
We got our Ethereum here, and I think there's a Note Haven, so we got a couple of, just in this room. Palin, there we go.
Woohoo!
You got 4 in the room, and you said you had dozens.
That's awesome. Yeah, no, and more to come for sure over time, because I think lawyers in the beginning were sort of like, what the heck, right? Most of the big crypto players are Delaware companies because that's what lawyers recommend, because Delaware's got great corporate law. Well, Delaware corporate law works for S&P 500 companies, but if there's a state that comes in and says you are enabled to do what you do, then that turns out to be more meaningful than, the corporate litigation, corporate case law that really doesn't matter unless and until you ever become a public company that issues your shares through the DTC. Then it matters, but I don't think anybody in this industry is ever going to do that. I'd be shocked. Maybe Coinbase will, but I'd be shocked if anybody bothers to go to that old structure from this industry.
Bitmain.
Well, yeah, but they're out of China, right? So it's a different story, and they don't have quite the flexibility to change the world in some ways. Coming out of China and Hong Kong, it's a little bit more difficult. But okay, point taken. That maybe there are 1 or 2 who will end up issuing in the old form, but 5 years from now, you won't see the Crypto 50 that Matt just referenced. I think a lot of them will be in Wyoming. I know a number of them have already re-domiciled but haven't publicly announced it yet. And then, we've got Note Haven. Charles was in the room. He's left the room. He came out, and I took my hat off to him. He put out a Medium post that explained why he was an American who was going to do his utility token offering in the United States. Risk be damned, I can't believe that, I'm putting words in his mouth, but I can't believe that the United States government wants to run out legitimate entrepreneurs. That was the message of his post. And you know what? Wyoming backed him because he put his flag in the ground pretty early on and said, I want to stay in the United States, I'm going to do this from Wyoming, and we're going to help you. So, yeah.
And I think when I'm asked about Wyoming, I often say that, because most of the lawyers will say, it's too risky to do anything in the U.S.
Yep.
And Wyoming, if you have anything that's not Wyoming investors, there's a theory that you could do it as an intrastate offering.
Yep.
That's kind of your position, but it hasn't been actually
tested.
And I would think, though, if somebody, like a Note Haven or someone does that, and all of a sudden the SEC, we have marijuana, which is illegal in every inch of the United States.
Yep.
And yet 20, 30 states have said, we're going to do
Taking
it
on the
anyway.
feds. Yep.
And no one's gone after them other than like
Yep.
Jeff Sessions grumbling, but there's not been a single arrest.
Right.
Or, you know,
Right.
whereas with crypto, we have no laws. We just have
Right.
occasional statements by Jay Clayton saying, well, maybe this and maybe that. And yet, you know, there's this incredible lack of clarity that we've been talking about the whole show.
Yeah.
And, you know, I mean, hats off for the entire industry for you to really go and address this. And, you know, it's the
Oh,
first,
thank you. Oh my
first
gosh,
chink in
wow,
the
thank
armor,
you.
know?
It is the first chink in the armor, yeah.
And,
Yep.
I think that where are we going in terms of, like, you've obviously open sourced the idea
Yep.
and some of the...
Any state could copy it.
Yep, the code sort of is
Yep.
legislative code.
Yep.
I've certainly brought it up in Puerto Rico.
Yep.
I'm going to continue to do that.
Great.
Hopefully, we can get you down at some point when we actually have a dialogue going that
Yeah.
requires a closer, which you obviously are. And what other states? I mean, I've heard. Data right now, I guess, is starting to take the torch.
Data, yep, Digital Asset Trade Association. I know there are some folks here involved with data. They are starting to take the torch. There are definitely rumblings in other states. Arizona already did pass an earlier version of the Wyoming law. We got attacked by the securities industry, so we had to tighten our language. And actually, in retrospect, it was the right thing because it's a lot closer to the SEC language. So it's definitely more... it's broader than the Howey test in Wyoming, but if you can fail the Howey test and comply with the Wyoming law, I can't give legal advice. I'm not a practicing attorney, but there's a pretty good chance that if you get litigated against, that you're gonna, as long as you comply with the Wyoming law is not easy to comply with. Let's step back. The real reason why the Wyoming law is not easy to comply with is because you cannot market your token as an investment. If you market your token as an investment, you are a security. And so, and there are 4 different ways that you can verify that you haven't marketed your token as an investment. It has to be immediately usable for a consumptive purpose, or if it's not, it has to be in the foreseeable future. And if it's not, then you have to take steps not to allow your token to be traded by the initial purchasers. There's a clause in there that says that you actually have to have a reasonable good faith belief that the initial purchasers are not going to trade it, and if somebody actually does list it, you have to take steps to delist it. That's not a lawyer's summary of it, but that's sort of the plain English summary of it, right? So that's, to Bruce and Matt's points earlier, a lot of the token offerings that were done would have failed that language, right? So I actually am pretty proud of what we did, and I think other states are likely to copy it. I know that there is a representative in Congress that actually has essentially duplicated that language, because it does fit nicely with the federal securities language, but nothing's getting through Congress anytime soon. Anyway, Arizona did pass a utility token, earlier version of the language that's not as strict, but I believe it has a very, very low cap. So in other words, it's crowdsourcing transactions. You can't use it to do very large capital raises.
So my former residence for about a decade, and still a place I spent time in, Nevada,
Yep.
Has been pretty crypto-friendly in terms of having the law that they passed about
Yep.
no taxes on blockchain.
That's why Trace moved here. Yep.
And so what is going on in terms of Data or anyone else trying to get a utility token act here? Because they're very crypto-friendly and business-friendly overall.
Yeah. They are. The one thing Nevada did, though, was enact a gross receipts tax for businesses. So there is a tax here that didn't used to be here, and a lot of attorneys who look at incorporating businesses in Delaware, Nevada, or Wyoming, those are the top 3 states by far for new business formations. A lot of the attorneys are now saying, because of the gross receipts tax in Nevada, don't go to Nevada. There's a gross receipt tax in Delaware, but again, it's, you go there if you're a big company that wants to have all of your business litigation litigated in the Chancery Court, where you don't have to have a jury of your peers and you can actually litigate in front of a business judge, right? Well, Nevada doesn't have that advantage, so now if you actually have to pay that gross receipts tax and you don't get the benefit of that court with all that case law, what do you really get? You definitely get crypto friendly, But Wyoming also exempted utility tokens from property taxes, and there's also no income tax in Wyoming to begin with. The other thing that's cool about Wyoming relative to Nevada is Wyoming has really, really strict privacy laws for LLCs. And in fact, actually, some of this industry was already using Wyoming LLCs for that reason. So you don't have to disclose to the state of Wyoming anybody other than the name of the registered agent. That registered agent has to have your name, but it doesn't even have to have the name of all of the other members. So what you find, given that fact pattern, is that Wyoming LLCs are very, very frequently used for wealth preservation purposes. They're used with offshore trusts very, very commonly. What does that mean for the crypto industry? Well, it means there's some interesting privacy implications of Wyoming LLCs. It's just like, if there's no state income tax in the state where you domicile, the IRS doesn't have an agreement with the revenue department in that state because there is no revenue department collecting that information, right? So here, the Secretary of State of Wyoming isn't collecting that information on the name of the members of Wyoming LLCs.
I heard somewhere that Wyoming doesn't even respond to requests by the IRS for information.
There's no revenue department that collects income tax, so there isn't anyone.
Wow.
That's your safest bet, right? If there is a revenue department in your state, you can bet they're going to respond to IRS inquiries.
Not even payroll taxes.
No, well, they do. The Wyoming does have a sales tax, and there's an interesting
Payroll.
Oh, no payroll. No, there's no income tax. There's no corporate income tax. There's no gross receipts tax for businesses, and there's no personal income tax.
There is payroll tax in Nevada. Yeah.
Yeah, and there is a small estate tax in Wyoming, but this is the reason why the billionaires are basically pushing the millionaires out of Jackson Hole, because it is the tax-friendly estate. And one of the 5 bills we passed last year was we exempted all crypto from property taxes. So we already knew there was no income tax, and now it's all exempt from property taxes as well. So the only potential tax that you might face is a sales tax, and that's one of the questions that's come up for the crypto miners. And stay tuned, we're working on that. So basically the gist is, as you think about Delaware versus Nevada versus Wyoming, it's pretty clear which of the 3 is the crypto friendliest. Could Nevada do the same thing that Wyoming did? Yes, but you'd still have some of the tax implications here. But it's a warmer climate, that's for sure. It's got its things going for it too.
And nightclubs that stay open for 24 hours a day.
That's true. And better airports, and it's just a more populated state for sure. Yeah.
So, but you're near Denver. It's at least somewhat.
Yes. Yeah.
So, your next mission is taking on the banks.
Yes. We are proposing a crypto-friendly bank in the state of Wyoming, and the reason is that we know that the biggest issue that hasn't been solved yet, outside of the SEC, which we've done what we can do. The biggest issue for the industry is that the banks just don't want to bank legitimate crypto companies. We're not talking about fly-by-night organizations. We're not even talking about crypto to fiat exchanges. We're talking about just basic business accounts to be able to pay cash management. Digital Asset Trade Association, set itself up in Wyoming, got a Wyoming bank account, and the next day got a call from the compliance officer, we're closing your account. Right? This story has happened so many times in this industry, and data isn't even touching crypto at all.
Right,
it's just dollars. And they're just, so if you lose your bank account, I think one of the biggest risks for any crypto startup is bank accounts, and if you manage to get one, you darn well better get a couple of backups, because if your bank closes your bank account, then you're out of business. So the idea here is that we're creating, in keeping with the open source ethos of the industry, creating a mutual bank. It's going to be an industry utility, so it's going to be owned by its members, and we have to differentiate it from the existing banks in the state.
Sort of like a credit union?
It's very, very similar to a credit union, but it's actually going to be a bank. Now, what's interesting about that is that it can do business with licensed money transmitters because it is a bank. So the crypto to fiat piece can be done. And because it's a bank, it's not a trust company, it could be a qualified custodian. One of the issues the SEC has, they keep telling this industry there are no qualified custodians. Well, that's not what BitGo and Kingdom Trust and all the institutional players in Prime Trust, and yeah, exactly. Everyone thinks, well, wait a minute, the SEC rules do mention trust companies, but the SEC is one of those, again, gray areas where they don't really have a leg to stand on in saying that the qualified custodians have to be banks or broker-dealers or FCMs, but they don't like trust companies. So that's why they've said.
BACT is one though, right? I mean, it's the New York Stock Exchange.
Yeah, well, BACT is actually it's a clearing organization. So it's interesting. That's a separate conversation. They are clearly being blessed by the powers that be in the securities industry, and their application seems to be going through very quickly. And I have some theories about what's going on there, but we can.
That'll be my last question.
Yeah.
When we get done talking with the banks. But the banking is going pretty well right now.
Well, I think there's at least a 50-50 chance, and I'm going to make the same appeal. Pam came to Wyoming. We need the industry to show up for our events. So watch the social media. Yep.
I mean,
thank you.
Yeah, no,
you got people there, and that was so important for the industry for the legislators to see that we are not all, dark web drug dealers and porn and gambling.
Sometimes it's just starting with a little thing like in Puerto Rico. For me to get an Act 20, not a 22 with the business one, right?
Yep.
You have to have a Puerto Rico bank account. You can't get a Puerto Rico bank account if they know that you're involved in crypto, right?
Yeah.
And so they have a thing, are you involved in these industries? Blah, 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 blah. And I was told because I am a consulting group and a PR firm that I can say, just because
It's the same thing
Microsoft
as
accepts
data.
crypto,
Yeah.
but they're not a crypto company.
Exactly.
So I put, with the blessing actually of one of the senior people at Banco Popular, who I run this by, and my tax lawyer, I said no. And so I sat down because I had to have an interview, right?
Right.
And one of the vice presidents comes and says, okay, so we know who you are. It's very easy to find who you are, but my understanding is you're not a trader. You're not an exchange. Mm-hmm. You do advertising. It's really PR, but and services, right? Yes. Okay, so you would not be a crypto company, but we will ask you if we think this is a suspicious transaction. And of course, they're never going to see one because I don't have Coinbase. On the other hand, if I take crypto and I run it through Bittrex, and then Bittrex goes to ItBit, which is a depository trust, I've never had any bank ever question it because it comes as a wire transfer with the name bank on it.
Yes.
Which is what yours is going to do as well.
That's part of it. That's part of the point. Yep, absolutely. And it will still have to comply with the Bank Secrecy Act. Some of you have seen my Forbes article about the Bank Secrecy Act. I think it is unconstitutional. I think this industry is going to be the place where the enforcement action is going to take place. And one of the things that Data is working on is a legal defense fund for this industry, because we know that the enforcement actions that happen with the SEC, with FinCEN and the like, they go after the weakest hand. And yet, that's how they basically enforce the rules against everybody else. So if there is a legal defense fund, maybe it's not going to be so easy to go after those weakest hands. Now, we want them going after the obvious frauds. I think everyone would agree with that. But they've gone after some that are not obvious frauds.
And as Bruce brilliantly kind of stated in his lunch address, there's nothing in the 33 and 34 Acts about KYC AML.
Yes.
It's been very recent stuff.
Yeah.
Money laundering is a term that didn't exist back in the 30s and 40s.
Yep.
I mean, all these things just keep on getting layered on the Patriot Act, and it just keeps on going. My favorite one, of course, is structuring, right? So it's like there were those little restaurants, and there was a little restaurant, I think it was in like Cleveland, where they literally shut down and just seized money because a woman was told by her accountant, oh, take your cash receipts from your donut shop and put in $8,000 or $9,000 at a time so that you don't have to fill out forms.
Yes.
Save some work. They call that structuring.
Seized all our assets, yeah.
It was a donut shop.
Yeah, no, I know. I think this Bank Secrecy Act is very problematic under the Carpenter Supreme Court case about cell phone data, something you're unfortunately more familiar with than most. But it's going to take a couple years for it to wind its way through. And in the meantime, we're going to have to comply with the Bank Secrecy Act. So you have to be a KYC and AML-able to be able to do business with this bank. And we know that we're taking on a fight with the Fed. At the last blockchain task force meeting, we invited the FDIC and the Fed. They accepted, and at the very last minute, as in the meeting I think was a Monday and Tuesday. As of Saturday, we got the news that the Fed had at the highest level decided not to come to the meeting, even though they were not testifying. They just didn't want to be put on the spot. And then the FDIC, once they got word of that, pulled out as well. So it's not going to be easy to get through the Fed. The Fed technically cannot deny a validly chartered state bank the ability to get what's called a master account, which is how you get access to the payment system. But there is a lawsuit in Connecticut for a bank that's not a crypto bank that's testing that exact issue. The Fed has spent 2 years denying this bank their master account without statutory authority to do so. And they are supposed to, this Friday, respond to that lawsuit. And so we are waiting anxiously to see what that response is. And we also put in the bill because of that the Attorney General of Wyoming, if the Fed does not grant a validly chartered mutual crypto bank its state license, if a validly chartered state mutual crypto bank is not granted a master account at the Fed and therefore doesn't get access to the payment system, that the Attorney General of Wyoming must sue the Fed. So, and that's the kind of stuff Wyoming loves, right? Because we'll take the gloves off. We've done that. As you said, you know, a number of states are taking on the feds in marijuana.
I was going to say, the other thing also is, I like to tell people that, like, we have a Supreme Court now, and it's getting increasingly so, that is very state right driven.
Yep.
And the last time that a regulatory agency overreached was when they said that the federal government has control of gaming, not the states, is effectively when they said we're going to shut down online gaming.
Yeah.
New Jersey said not so fast. We won
and challenged it.
They challenged it, and they
Yep.
won. They
Yep.
won the Supreme Court. And I
Yeah.
think if it went to the Supreme Court, again, a lot of these smaller companies can't afford that. Although I basically said, and correct me if I'm wrong in my supposition, I said, if you're like a high-profile case and you've done everything that Wyoming did, and they sue you in Wyoming, Wyoming's probably going to go and help you out.
Wyoming's going to help you out. Yeah, that's been the history.
Yeah.
I mean, I can't speak for the state, but yeah, that's
And they
certainly
have
been the
6 shooters
history.
in cowboy hats, and they don't ask for the IRS. You know,
Yeah.
This is the state you want on your side.
Well, and I also, in the prior conversation, Matt was one of the big sponsors of Wyo Hackathon. The University of Wyoming's actually been teaching developers blockchain for a year and a half already. And so when Joe Lubin came in, there was already an Ethereum-based voting project that the governor had requested. We're actually creating blockchain developers in the state of Wyoming as well. So there is already a community there to tap into, a support level to tap into. That was one of the great building blocks that enabled us to say, well, let's, as a state, go become the leader in this. One thing before we close on the bank point, though, is you're going to have to, in order to get access to this, have a Wyoming presence. And so what's going to happen is you have to have 2 board meetings a year there. You're going to have to open a Wyoming office. This is how Wyoming's going to grab the industry to actually come and put 1 or 2 people on the ground. And that's, but you know what? That's a fair trade, I think, because it's going to be tough to get this through the banks. The community banks hate what we're trying to do here. Because they look at it and say, well, we will bank the industry. Well, the problem is they're not banking the industry. So if they're not banking the industry, let's create something new and different. It's a mutual, it's 100% reserve, it's not gonna make any loans, it's purely a payments processing, cash management relationship. And it's not gonna have FDIC insurance, so it's for businesses only. So it's very different than a traditional bank, but still they hate it. So it's going to be tough. That's some of those trades we're going to have to make to get this through the legislature. But I think in this industry, it's not going to be difficult to find a co-working space, to put 1 person there, have 2 board meetings a year, right, and actually, have a Wyoming presence. There's more in Wyoming than most folks would realize. And as you said, it's an hour-and-a-half drive from Denver, so.
So the final topic, not that taking on the SEC with the utility token and the banks is enough. You've also definitely been a vocal opponent of sort of the concept of the Bitcoin ETF. Why don't you talk a little bit about that?
Yeah, well, having come from Wall Street, I spent 22 years on Wall Street, ran the pension business at Morgan Stanley, and that was when I really got in and realized how screwed up the plumbing of the securities industry is. It's very unfair. It easily loses track of who really owns what. I know Bruce talked about this earlier. I personally uncovered unauthorized securities lending happening in a pension fund's account that would not have been discoverable by looking at the brokerage statements, because the brokerage statements only show you that top layer. It doesn't show you what's going on behind the scenes in these so-called omnibus accounts that never foot. There's never a moment in time when Wall Street has an accurate accounting of who really owns what. So now when you start to try to apply that clearing and settlement model to our world, where everything is real-time settled instead of delayed settled, it's gross instead of net, and it's direct ownership instead of this indirect omnibus account behind the scenes, three-card Monte, those are two very different business models. And frankly, they need us, not the other way around, but what they're doing is coming after us, because they look at Bitcoin and say, this is an asset class that our companies want to start using for large value payments, and hedge funds want to trade. So let's try to fit that square peg into a round hole. And I'm not, even in the letter that there were 5 of us who got together, including a couple of core developers, to write to the SEC, we did not recommend anything. All we did was warn and essentially say, everybody needs to be talking to the core developers. And I must say, as somebody who's been on both sides, you know, Goldman Sachs is probably not going to be able to hire a Bitcoin core developer, okay? They're just not going to go work at Goldman Sachs, pretty unlikely. So it's not going to be easy for these traditional firms.
Well, one of them went to like said, Bitcoin's failed, and he went to work for R3, right? I forget his name. Yeah, he did. Yeah, Mike Hearn. But you know, Fidelity, I think, is a good guy. You're going to see that there's a differentiation. Fidelity's obviously, as all of us know, because we've been following this, they've been mining since 2013, right? So they're in a different zip code. They've been handling Bitcoin directly themselves. And they are a long-only buy-side shop. That's a big difference than the traditional, you know, than BAC, the New York Stock Exchange, or Goldman Sachs, or Citigroup is got Bitcoin depository receipts. These are the sort of, that group is the sell side. The sell side views their customers as counterparties. The buy side, long-only buy-side firms like Fidelity and Vanguard view their clients as fiduciaries they need to take, you know, a fiduciary level of care with. In other words, they think properly about customers. They don't look at customers as counterparties from whom they can make profits. They look at customers as customers for whom they can provide a valuable service. Big difference. And that, unfortunately, the sell side is coming after this industry. And I think it's funny because Trace and I have had this long conversation. When he was talking about the sixth network effect of financialization, I was, in the beginning, he wasn't talking about the negative side of financialization, where you will see fractional reserve Bitcoin. You will see the Citigroups of the world creating more claims to Bitcoin than there are actual Bitcoins, precisely because that's how the clearing and settlement systems of Wall Street work, and the regulators let it happen, and I think it's outright fraud in a lot of cases. With gold right now.
Absolutely, absolutely. And yet there's nobody on the regulatory side enforcing any of this or sending John Corzine to jail for openly practicing any of this, right? So they're coming after us, but there's an awful lot of housekeeping they should be doing in their system, and now we're going to try to put Bitcoin in that system. The great news about it is, though, this is not going to blow up Bitcoin. Bitcoin is going to be just fine as long as you own your private keys. But the warnings that we've been giving are, look, there's going to be a run on the bank inside one of these ETFs or inside one of these depository receipts or inside the futures contract, and they're not going to. Basically, that's going to be when the systemic short is revealed. And a lot of you are probably wondering, wait a minute, how is it that there's a systemic short? How is it that people don't know? Well, one of the hard parts about it is the accounting profession allows the securities lending transactions to be recorded such that both parties in a securities loan record that they own the same asset. Okay, so that's why auditors don't catch this. They get clean audit opinions, and yet the whole system is short. How? And no one knows how short the system is, because each individual financial institution's financial statements are accurate, but at a systemic level, you don't know how many of them are reporting that they own the very same asset when there's really only one asset, right?
Double spending.
That's the double spend problem. Exactly. This is what our industry is trying to solve, and yet they do that in spades every day. And only when you have what I call a reckoning event does it get revealed? It was in my pension transactions where we saw these things. The Dole Food case is a good example. There were 1/3 more valid brokerage statements than there were actual Dole Food shares outstanding. And that's a 2017 case. So this happens. It's going to happen in Bitcoin. Just make sure that you and your family and friends aren't anywhere near these financial products.
Do you have a problem with an ETF the way that the one that will, if anyone goes through, the one that will go through would be the SolidX CBOE, 25 Bitcoins per share, no hypothecation whatsoever?
They have not promised that.
Oh.
See, you got to look at the fine print, right? And Bakkt came out and said no commingling and no rehypothecation. Well, they've never promised that. They're only talking about at the futures contract level in the Bakkt case. There are 3 layers where rehypothecation can happen. Either the futures contract itself, or the clearinghouse, or the warehouse. Where do most securities loans, or in this case commodity or crypto loans, take place? It's going to be in the warehouse. They've never answered that question. They've said only, we're not going to lend at the futures contract level. So the same thing, the level of disclosure in the ETF filings is really pretty slim. The other place where the disclosure is very slim is on forks. Go and look at all the SEC filings for all of these physical settled products, and you're going to see, including Truex. Truex is, I just read it last week. They literally say that with regard to forks, it is in our sole discretion as to how to handle the forks. Yeah, what is right? It means they're not promising you anything, and if they decide that it's too risky to go claim the coins, like, they decide that they don't want to reveal their keys to go get their Bitcoin gold, guess what? They don't have to pay it to you, and if you sue them, you're going to lose because you do not have a legally enforceable right. So all of this stuff, trying to fit these square pegs into a round hole, it's not, you're not getting Bitcoin. The sad thing is I think a lot of people probably think they're going to be buying Bitcoin through your stockbroker. All of us know that's not what's happening, but they're going to be marketing it as that, and just beware.
So have your own keys.
Yep.
Or if you're using a custodian, make sure that they have their own keys and are regulated to do so, and there's no hypothecation.
Yep, that's exactly right. And I think to the extent that we're going to see a lot more crypto custodians coming up, including the trust companies that are here. Yep. Get multi-sig arrangements with them so that you can track your own coins, verify that. I think there'll be a lot of advances that this industry will be able to show by this conference next year. Yep. in crypto custody with how the best of the technology can be deployed as opposed to trying to use these old systems that are so imperfect.
Fantastic. And maybe next year we'll get whoever the new governor is to address what Nevada's position is, and hopefully
that'd be great
because of data. So
that'd be great.
We've got time for a couple of questions before Perry comes on. Enzo?
Yeah.
And there are pension funds that actually want to invest.
Oh, wow. There are a lot of pension funds that want to invest. Yeah.
But they're like afraid. Like they don't want to have a wallet. They don't want to have private keys. They're super afraid of that stuff.
Yep.
So how do they deal with that?
So, well, there were 2 institutional funds that got funded earlier this summer. One by Andreessen Horowitz. The other was started by the former Sequoia partner. Those were both institutional funds, and they're both closed. So it came out subsequently. It was Yale, and Yale, for those of you who are not familiar,
Right.
is like the leader. Everybody follows the pack. There's a pack of people who follow what Yale does. So when Yale announced that it was invested in these funds, Yale and Harvard and Stanford and Notre Dame, and it was a who's who. Now there's FOMO, right? The problem is there isn't anybody else out there right now because those 2 funds are closed. That one raised 300, the other raised 400. But I would challenge the notion that these folks can't maintain their own private keys. I get that they're nervous about it, but you probably heard from Bruce earlier, but Wall Street instruments were bearer instruments for most of history. It's only very recent that we went to this crazy indirect model in the last 30 years. So pension funds have always been used to holding bearer instruments. It's just a new and different thing now. And I think there will be a lot that get comfortable with it. I've been doing a lot, having come from that world, been doing a lot with the pension fiduciaries, trying to get them ready and pushing their custodians to get them ready, because what if they wanted to invest in the Telegram ICO? How would they have done it?
Well, wait, so you're saying that they would still use maybe a actual custody, because this is the problem. They're just afraid. They're just afraid of doing it the
Yep.
way we do it currently, and they're waiting for the custody and the good location type of stuff.
Yeah.
So you're saying that, like, I know a couple of people that are already setting up like custody trusts and
Yeah.
all this stuff, like Prime Trust and everything, and they'll hold crypto, and there are banks that are looking at it too. So you're saying that that's really the answer if they don't want to do their own private keys, is basically
They have
that they
to get
can't
a
do.
custodian.
Okay.
Yeah,
'Cause
but they have to get
I get a little confused about the difference of having the actual private key when I know that the institutional funds don't want to do that.
Yeah, well, that whole custodian thing is a gray area too, right? Because we already alluded to the fact that the SEC doesn't think there are qualified custodians for crypto, but there are a lot of trust companies who think they are qualified custodians for crypto, and some pension funds require a qualified custodian, others don't. So it's a jumble, it's a gray area. There's no question that they want more of those kinds of institutional quality funds. But I also think, the market, we've lost a lot of market cap in this industry. It may be a while before you see more of those institutional quality funds pop back up. But you're absolutely right. There's a desire on the part of pension funds to get into this. And I did a webinar with International Center for Pension Managers. It had some of the largest pension fund managers in the world on that webinar. They're probably already looking at their own, the CalPERS and Ontario Teachers, the gigantic ones. Why would they pay away? And we actually talked about this at the end. Why would they pay a custodian? All they're doing is trading one agency problem for another. And those big guys can afford to pay people like us. And frankly, again, any of you developers who get, phone calls from them, they're the good guys. They are who we want to work with. The sell side trying to get into this industry, that's not who we want to work with, because they're going to try to fit us into their round peg, square hole. The buy side, like the pension funds and the Fidelities and the Vanguards, those are the ones we do want to help.
Great time to plug Paladin Trust, but I'll answer what you just said, which is why a custodian. Number one, insurance. A lot of times people don't want to hold that in their office, in their desk drawers, in analyst Josh's desk drawer in a USB stick. And number two, staking. A lot of these coins stake, and you've got multiple wallets, forking, things of this nature. We've got another question here.
Yeah, one more question and then.
Hi, Manny
yeah.
Alejandro. Thanks so much, Caitlin. That was terrific. Appreciate you expressing your point of view. What do you think about the OCC FinTech Charter Bank in terms of a solution and a workaround, and then how does that compare to what's going on in Wyoming and what other states are contemplating?
Sure. No one's been granted the OCC charter yet, and no one has any idea what the timing of that is going to be. It is also FDIC insured. The FDIC is, frankly, one of the biggest obstacles to this industry. It's the FDIC compliance audits that have scared a lot of banks away from banking this industry. And so if the OCC solves, the 50-state problem, but it doesn't solve the FDIC problem. So the reason why we're going the direction we're going in, it's a non-FDIC insured bank, is precisely to avoid that FDIC compliance audit issue. Not to avoid the Bank Secrecy Act requirements, because we know the Fed's going to require all banks to comply with Know Your Customer and anti-money laundering, but we're going to try to get the FDIC issue just off the table by essentially saying this is not an FDIC insured bank. That means you can't take retail deposits. That means, if there is a loss, there is a loss. But it's a 100% reserve bank. So the traditional things that causes banks to go bust, like credit losses on the loan portfolio, this bank won't be lending. So the real issue, frankly, the real issue in this bank is going to be the anti-money laundering and Know Your Customer compliance, even though the requirements are going to be lower. But that's, if the OCC, if somebody does actually get a FinTech charter and they do want to bank this industry, that's going to be more attractive than Wyoming, because Wyoming's one state. But right now, nobody's done it, right? There are 3 banks, of which one only banks the large exchanges. that bank this industry. It's not easy to know for sure you're going to be able to keep your bank account. So that's what we're trying to solve. We have a couple of other industries that are not politically correct. Wyoming loves to kind of take on the non-politically correct industries. And the one in particular, the firearms industry, has been losing bank services right and left. They're facing the same problem that the crypto industry is. It's legal at a national level, but the banks just don't want to bank the industry. So if that's the case, we think we're going to have a natural ally in the firearms industry. There are probably some other industries, the marijuana industry south of the border in Colorado, the porn industry here in Nevada. They're all facing this whole weaponization of the banking system issue. And it's a problem because the federal government can't require the banks to bank an industry. And if they look at the cost benefit of compliance and say, forget it, which is exactly what's happened to our industry, then guess what? Nobody in the industry can get bank accounts or can keep them. That's what we're trying to solve.
Wow, an awful lot of wisdom and information here from Caitlin. Thank you so much.